I'm Dr. Deborah Watson, Innovation Manager at Business West, and I'd like to welcome you to Innovating to Net Zero. If you are new to us, Business West is a B Corp offering business support to startup and growing businesses in South West England, and I shall share more information on how you may be eligible for support at the end. Over 4 weeks leading up to Net Zero Week in July, this series looks at key challenges and opportunities that innovative businesses are facing on their road to net zero. Looking at the needs of innovative companies, we cover strategy, legal requirements, winning and retaining business, and communicating your net zero message to your workforce and customers. Innovating to net zero is about how you can have green, responsible growth for your innovative business. A little bit of quick housekeeping. If you want to ask our speakers a question, please add them to the Q&A section. And we are recording the session today, so you can watch it back later if you wish to. So this morning, investors no longer face a choice between profit and saving the planet. Green finance plays a crucial role in driving the transition to a sustainable future by aligning financial interests with environmental objectives. We have two guests today, Dr. Ben Mashuda, Funding and Finance Specialist at Business West, whom we shall hear from later. And firstly, we welcome back Aisha Stewart, Net Zero Business Advisor at Business West. Aisha has supported communities, governments and businesses to make a shift towards a healthier and sustainable future. So we'll start with you, Aisha. Good morning.
Good morning. I'm going to start getting my slides up. Oh, geez. All right. Can everyone see my slides all right? Perfect. All right. Good morning, everyone. Thank you for joining this morning. My name is Aisha, and I'm presenting alongside my colleague Ben this morning. As Deborah mentioned, this is the second webinar of the Innovating to Net Zero series, and the focus of today's webinar is on sustainable finance. As mentioned, please use the chat to ask any questions you have, and we'll get to it in the Q&A section in a bit. So here's just a bit of a run through of the topics we'll be covering this morning. Firstly, kind of starting off, most importantly, kind of defining what sustainable finance is, what the government is doing within this space, as well as kind of how to prepare your business to attract investment, as well as sharing what funding opportunities exist for businesses. Before I get stuck in, I will start off with my favorite topic, which is myself. As mentioned, my name's Aisha. I am the Net Zero Business Advisor at Business West. My role involves me working with some of our members, as well as other businesses within our region who are getting started on their carbon reduction journey, or who have already started and would like some more support along the way. I deliver a range of workshops to help businesses get started on their journey and really understand some of the jargon that tends to exist within this space, as well as provide some one-to-one support along their journey. I have a particular interest around behavior change and really understanding what motivates businesses as well as individuals to act more sustainably. But just a little bit about Business West. So as one of the largest chamber of commerce in the UK, Business West worked with over 20,000 businesses with the aim of making the Southwest the best place to live and work. We were the first chamber of commerce to become carbon neutral, and we're aiming to be net zero by 2030. Additionally, we became a B Corp in 2021, which is a designation for businesses that demonstrate a high social and environmental performance. But as an organization that works with a range of businesses across the region, developing webinars and resources to help businesses on their sustainability journey, we really want to ensure that we're leading by example. We're very much on our carbon reduction journey and continually looking for opportunities to reduce our footprint. Additionally, we're involved in some leadership boards within the region, and that provides an opportunity for us to be a voice for our members as well as other businesses within the region in decision making. I did just want to share a bit of information about the support that we currently have available for businesses at the moment. So as part of our Training to Net Zero offer, it consists of various different elements, one of which being our Aiming for Net Zero workshops, which aim to provide businesses with the foundational knowledge to make progress on their carbon reduction journey. We're expanding our catalog of workshops that we deliver to provide more opportunities for businesses to further develop their knowledge on what steps they can be taking to reduce their carbon footprint. Additionally, we offer some support around through our Lunch and Learn webinars. These focus on specific topics relating to net zero and include speakers and provide businesses an opportunity to share good practice. So some of our previous topics have included electric vehicles, carbon reduction and offsetting, as well as greening your supply chain. Our next one will be taking place on September 28th, and we'll be looking at digital sustainability. So as part of our net zero offer at the moment, we have some funding available to support SMEs with up to 12 hours of support on their carbon reduction journey. Thanks to some funding from Somerset Energy Innovation Center, businesses get up to 12 hours of support, which includes our workshops, any of our lunch and learns, as well as one-to-one support from myself. So if you are interested, please do get in touch after today's webinar. And additionally, if you are an innovative business, please do contact our Innovate Edge colleagues. But as I mentioned, please do get in touch after today's workshop or webinar, and we can direct you to the most appropriate team within Business West to support you with your request. All right, so the focus of today's webinar is on sustainable finance. So to give you a little taste, really to give you a little taste of what it is, and share what sustainable finance looks like within the space at the moment. And so probably the most important place to start is really around kind of defining what sustainable finance is. Sustainable finance is defined as the process of taking ESG considerations into account when investing. Environmental considerations can include climate change mitigation, biodiversity, the ecological emergency, as well as pollution prevention. Social considerations are related to the issues of inequality, labor relations, and human rights. And lastly, the governance of public and private institutions, including management structures, employee relations. They all play kind of a fundamental role in ensuring the inclusion of social and environmental considerations in this decision-making process. In essence, sustainable finance is understood as finance to support economic growth while reducing the pressures on the environment to help us reach our climate and environmental objectives, while also taking into consideration the social and governance aspects. Sustainable finance is about financing both what is already kind of sustainable and environmentally friendly today, as well as transitioning everything else to be more sustainable and environmentally friendly over time. It's about really financing the future towards a more low carbon and sustainable economy. And this finance is an integral part of the delivery of carbon reduction targets. Supporting sectors and businesses on this transition to a low carbon future is important to support further economic growth. I do just want to quickly highlight what is happening within the government at this moment and within this space as well. So the government acknowledges that the importance of finance to be able to drive the transition and support the delivery of their net zero by 2050 target. Their recently published green finance strategy represents the latest kind of policy step to really seize the opportunity, mitigate any risks, and ensure the necessary finance flows to net zero, energy security, and environmental industries. The strategy also set out how the UK government will pursue its ambition to become the world's first net zero aligned financial centre, equipping the market with the information and tools necessary to drive the transition. Within the strategy, they highlight that in order to deliver the UK's net zero ambition through the late 2020s and 2030s, an additional 50 to 60 billion amount of capital investment will be required each year. This investment will support the sectors and the technologies of the future, enabling sectors to adapt and continue to grow as part of this transition. And the government has already kind of explained and articulated some of the goals that they have around investing, which include providing up to £20 billion of funding for the early deployment of carbon capture, usage and storage, as well as some announcements around the Great British Insulation Scheme, which is hoping to deliver an additional investment by 2026 for energy efficiency upgrades. Overall, the government will identify opportunities to use policy, regulatory, and funding levers to provide businesses and investors with the confidence that sustainable, low-carbon businesses are the future. And so hopefully that should drive more work and opportunities within this space. But how do you prepare for this? Increasingly, more investors want to support businesses that are sustainable and supporting the transition to net zero. But as a business, some things to consider when preparing for investment is identifying opportunities for improvements from an ESG perspective. So from a social lens, it's looking at how business practices affect society. So looking more into diversity, inclusion, employee rights, customer satisfaction. From a governance perspective, it's around business management and transparency. And from an environmental perspective, it's about reducing your environmental impact through the reduction of emissions, or taking action on the ecological emergency, and much more. Developing a carbon reduction plan is a useful signal to reflect your business's ambition to be more sustainable, and what steps you have in place to get there. As mentioned, this is something that we at Business West can support you with if you're unsure of where to start, so please do get in touch. And sharing what you're doing and what your future plans are also an important part of this as well. The last webinar of the series on July 4th, I believe, discusses how to communicate what your sustainability ambitions are internally as well as externally, especially when we're at a time where more and more companies are kind of being called out for some of the claims that they're putting out there. So I hope to see you there on the 4th of July. Hopefully I've said that date right. But I will hand back to Deborah, who will hand back to Ben, who will talk a bit more in detail about sustainable finance and what sources exist at the moment.
Thank you very much, Aisha. So, as Aisha said, next we hear from Dr. Ben Mashada, the Funding and Finance Specialist at Business West. Over to you, Ben. Ben, we can't hear you speaking.
Everything moved around really quickly. Right. Morning,
I can hear
everyone.
you now, so over to you.
I shared before I unmuted. It's a cardinal sin these days. Morning, everyone. So my name is Dr. Ben Mashada. I'm the Funding and Finance Manager at Business West. And I just, going off the back of Aisha's last slide there, those three things she just mentioned are really important when it comes to raising finance as well. And I'll mention them towards the end of my deck that I'm going to go through just now. So I'm just going to cover quickly what we're going to cover today. And this isn't actually in order. You can see I've numbered them. I've kind of gone in a bit of a flow mindset across these sort of things, but we're going to end with a bit of a case study if we've got time. So I'm just going to very sort of try and cover off a little bit more detail around the finance side and the options available when it comes to sustainable growth and finance to support that. Aisha mentioned some of it just now, and I think some of the other webinars that we've got lined up also play into this. But I mean, really, sustainable growth requires additional finance resources so that you can implement those environmentally friendly practices, deliver those innovative solutions, support social initiatives. And whereas you've got traditional finance methods are available, what you might think of as sort of what a business can get, there are additional complementary other approaches available to support green initiatives, ESG, and other things within a business. So I've mentioned a few here: green bonds, impact investing, and sustainably linked loans. So all of which these sort of channel money towards sustainable businesses in different ways. These financing mechanisms incentivize and reward companies committed to addressing environmental and social challenges importantly. So, I mean, I'll quickly just go over what they are if you're not aware. So a green bond, it's on the low risk end of the spectrum for investors. But what it is, it's people who want to invest can get a fixed income from these instruments that the people who are arranging these bonds, they will take the money that you give them. They'll give you a fixed income, so that's nice and easy, nice and low risk. And all the money that you put into that will be exclusively used to raise finance to fund environmentally friendly initiatives, and that can be renewable energy projects, sustainable infrastructure, other things. Usually quite big projects that require a lot of money, so can't be funded through small pots. So these bonds are really attractive to many investors who are looking to support that growth, provide businesses with access to capital, but also by having these bonds, you can kind of, as an investor, showcase your commitment to responsible practices. which is really quite important. We'll cover that again as well as we go on, but impact investing is the next one on the list. And it's impact investing, it doesn't necessarily only link to sustainable and green initiatives, but it's directly investing in businesses that prioritize, in this case, ESG factors. So contributing to the growth of sustainable initiatives, fostering positive change, generating positive social and environmental impacts alongside financial returns for that investor. But these are much more higher risk because you're investing in a specific business, and that business, it typically, it's going to be fairly small. I think the ones who are being invested in this way, and that incurs a lot of risk. But however, there's potential to do a lot of good, and there's potential to get a lot of reward as well financially off the back of this. But that business could also go bust, which does happen. And sustainable linked loans. So that's it's a sort of financing option that aligns financial incentives with sustainability performance for a business that is lent to. So offering loans at interest rate discounts or other financial benefits to companies that achieve something like a predetermined sustainable target or targets. So you can see how that could be really quite attractive. So many investors, why would investors do this? We kind of just touched on it a little bit, but they have their own targets around ESG to meet. So they have to prove in many cases that they're not targeting environmentally negative businesses when they invest, or generally overall on average, their businesses they're investing in are environmentally positive. And if they get that wrong, they risk their own refunding these investors. And that, a fund will typically get money from various sources to then give out as part of the investment. If they're not trying to get all the different money from all the different bigger pots that they can, then they're not doing a very good job, and they could rule themselves out quite quickly of a growing area of finance if they don't get this right. And it also spreads the risk and other things like that as well. When we're looking at traditional sources, lenders like banks and other things like that, there is actually quite a lot going on. So NatWest, for instance, I'm not going to go into all the details, but just as a sort of, for instance, we've got NatWest who have a lot available to any business. They don't have to be a customer of NatWest, that you can access tools to support your business sustainability. So there's carbon calculators on the website you can just access. They do available to everyone sustainability masterclasses. They have toolkits. And I mentioned the accelerators there on the slide. They've got a clean transport accelerator with Warwick that they're running as well, which is showing a really strong commitment to this area. I think it's quite laudable. So I'm going to just move on, if I can get my clicker to work, to something which I found really quite interesting that came out of the European Commission last week. And Brexit has happened, but that still doesn't mean this isn't important to us. It shows a lot around the thought from government and international organisations like the European Commission. And it says basically that their aim is to ensure that they are encouraging private funding of transition projects and technologies, read into that ESG, and to do so, they are proposing new rules for ESG rating providers to increase transparency to the market for sustainable investments. The aims of all this is to ensure that the sustainable finance framework works for companies that want to invest in their transition to sustainability. And it also makes the sustainable finance framework easy to use, contributing to effective use of other things like the European Green Deal objectives. And on sustainable finance specifically, it goes on to say that it's taking further steps to boost investment. The transition to climate neutral, sustainable economy by 2050 offers new opportunities to companies and citizens. We've heard that before. It says many businesses and investors have already embarked on that journey, started that journey, as their growing size and sustainable investment testifies that. And I'll come into the trends in a second. However, companies and investors are also facing challenges in this transition, especially when it comes to complying with new disclosure and reporting requirements. I think that's very interesting. And the innovators working to support businesses, councils, groups like other things like that, they need to meet their reporting requirements. And it's something, there's a lot of people working in the area to support them meeting their reporting requirements around this transition to net zero. Places like Bristol have announced their own targets. And we see people working in this area all the time. And it's really hard to get it right on reporting against all these different regulatory frameworks, etc., that they have to do. It's really hard to get it right. The best ones do it in an educational way. But it's something, there's a number out there, and there's a number that we've worked with as well, that there's a lot going on. There's a lot of really good work. So it doesn't make it easier to get funding, though. All this said, it's still hard to get money. And it's always, I mean, it doesn't mean there's money not out there. There's quite a lot of money out there. But the same amount of work needs to go in to attracting investors if you're in this space than it has if you're not. Investors are all the same, you know. And I'm going to quickly, there's a few things I've put on the screen there that go through sort of very sort of core key things that equity investments need to get right when you're talking to or pitching your idea to investors. So the idea, you know, that's the value proposition. Is it sound? How it will make money? You know, is it a viable profit-making business? How are you going to ensure the potential of the business is going to be achieved by getting the route to market right? And how the investor will make a return on their investment. Those things still need to be there. And it's the same for impact investors. You know, if you consider it, you know, at the end of the day, investors, why do they invest? They want to make a return, you know, because they might be investing because they can't get the same returns, they can't get the returns they want elsewhere with their money due to interest rates or other things. They get tax relief if they invest a lot of the time if they're investing. You know, it's, you know, really kind of quite money-focused things like that are really important to investors. But also, a lot of the time, they do want to add value and they do want to participate in a business and contribute to that, especially angel investors, the sort of the more earlier stage investors. Oops, click once, not twice. So when I reflect on that as well, I think there's a few things that I would always say it's important for entrepreneurs to get right. And often they get wrong. And I see it all the time. So I've come up with this very sort of simple list as well, you know. Going back to that, the idea thing, it's the value proposition of what you're proposing is really important. This counts to sustainable businesses and anyone else as well. You maybe have to tweak it and give me a second and we'll come on to exactly why. But a value proposition needs to be concise, a concise statement that communicates the unique benefits and the value of a product, service, or whatever that you offer to a customer, highlighting specific problems that it solves, the value it provides, and why it's better to the competitors. You know, it's in a very short statement, you can persuade a customer to choose you over the alternatives. And that's the really sort of first step, is getting that right. And it's often the hardest thing to do. Traction, really important for investors, this one. Sales are king. If you've got really good customers, you can convince a lot of people very quickly that you're an investable business. If you haven't, then things like letters of intent are probably the second best, and all the way down to things like likes, social media and other likes that sort of show interest from your actual customers in the business. Getting good customers is essential to growing a business and should be the focus of a business in many cases. And it convinces investors that the value proposition, the route to market, and other things like that are right. Each sector has slightly different focus areas of traction that investors are interested in. But you need to know all different angles as well, because investors will often question those. The ask around money is the third one there. How much, why, for what, timescales, what your next raise plans are. People get that wrong all the time. They don't flesh it out enough. It can be, if an investor doesn't know what you're going to spend their money on, they might think you're going to spend it on flash cars and holidays. just consider that as a worst case scenario, but it's something that is really important to get right. And then security. And by that, I mean IP and securing the value of a business. IP, intellectual property, is very valuable, can be very valuable, and securing it can be key to many businesses. It also provides security to that investor. If they're giving you lots of money, for whatever reason, the business might not succeed. However, if they have IP within that business, it can still retain a lot of value to those investors, and it could be it's a large asset that could be sold on, even in the case of a business failing. So I'm just moving on now to sort of off the back of all those things. On top of all that, there are many impact investors, lenders, financiers, and funders out there, and the numbers are increasing all the time. Importantly, you want to be attractive to them, and to do that, you can adopt a few sort of strategies. I put 3 sort of things in here. This has come back to when the last slide of Aisha's deck just now. Firstly, it's essential to demonstrate a clear commitment to sustainability and ESG factors. This includes transparent reporting on whatever your focus, environmental, social impacts, setting ambitious sustainability goals, ESG goals, and integrating those considerations into the company's overall strategy. That kind of thing, it might sound simple, but it's a big thing to get right and get in place. It has so many benefits for a business. Secondly, communicating the financial benefits and long-term value associated with sustainable practices. So not just doing it for the sake of it. Demonstrate the potential sort of things as cost savings, enhanced efficiency, risk mitigation. They can all attract investors who recognize the value of sustainable business models. And thirdly, actively engaging with stakeholders and showcasing positive social, environmental impacts really helps build credibility and trust. Involve communities, customers, employees in all of those initiatives can create a really compelling narrative that resonates with socially conscious investors. So we've talked a lot about investment now. I'm going to move on from it. Maybe if there's any questions, we can answer them at the end. But I'm just going to sort of go on to the trends. I mentioned this a minute ago. This is from the British Business Bank Small Business Equity Tracker 2023, released Thursday last week. So I hope you appreciate all the new news that I'm bringing you on all these things, because this is all hot off the press. And if you haven't already had a chance to read through it yet, basically what it's saying is in 2022, equity finance in the clean tech sector rose 50% to 0.9 billion, marking the 7th consecutive year of increased investment. And at the same time, UK equity finance overall declined 11%. So that shows you that it is a very important sector to be in. So there's some bright spots in specific areas of the market alongside that sort of overall decline, including record investment in university spin-outs, and specifically clean tech spin-outs of universities raised 2 billion of equity finance in 2022, the highest amount on record, accounting for 12% of the total UK investment during the year. Deals received by these companies were also 33% larger on average than others across the wider market. And it just demonstrates the role of universities and others in creating high growth, innovative companies in the UK. So I just sort of highlighting the value of clean technology businesses there. It shows a clear trend. The money is going in that direction. And the UK is doing well internationally as well. If you compare it, the clearest example is, again, clean tech, because this is what they measured in the report, where the global growth rate is 211%. UK matched that over globally with a 208% one. And the UK now has a market share globally of 5% of that fast-growing sector. So it's a hot area to be working in. And I'll move on to a slightly different report next, which is slightly older. So it's not as hot off the press as the one I just mentioned. It's a small business finance market report, again from British Business Bank. And it's worth noting as well that British Business Bank is a government body with stated aims around driving sustainable growth and prosperity in the UK. driving, backing innovation, unlocking potential, and building a modern green economy. So what it said about in the report is that the momentum remains strong for net zero priorities in the second half of 2022. A lot of that was off the back of COP27, if you remember that. And overall evidence suggests that the economic environment has somewhat tested smaller businesses' ability to pursue environmental sustainability. But commitment remains high, given the wider challenges that businesses are facing. 2/3 of SMEs that prioritize environmental sustainability identify the economic environment as a key obstacle in becoming more environmentally sustainable this year. Yet half of all SMEs still regard this as a priority. So removing barriers to small business access to external finance remains key for accelerating decarbonisation of the UK economy. I won't go into too much extra detail, but SMEs' demand for external finance is high. Especially important with aligning finance. So there's an importance of aligning that supplier finance to those agendas. I'm going to move very quickly past this one, which just shows other trends, including high value and number of deals in clean tech companies. When the regions are examined, the Southwest is 6th on investment raised, 5th on net zero related deals, which is good, I think. And overall, it's Southwest is 3rd on total low carbon renewable energy sector turnover, which is another positive thing. So I realize I've gone on a little bit here. It's not like me at all. But I'm going to quickly cover grants. So grants are my bread and butter. You know, I do these a lot, and there's a lot of different types of grants. Innovation and R&D are sort of what I do as a day job. And there's a lot of grants out there. I'm not going to read through them all. However, what I will say is that these are all funding available. You can see on the right-hand side that the bodies there. One of them, Innovate UK, the one at the bottom, is the UK's innovation agency, and it funds lots of R&D projects across many sectors. However, it has committed £1.3 billion to go towards net zero for their future economy focus by the end of April 2025, which is huge. So there's a lot of funding out there. This is slightly out of date, but not much out of date, that list. However, you can find more if you go on online and just search for funding from Innovate or others. There's other funding away from innovation, you know, grants from government, local bodies, others cover lots of different aspects of business with a huge part to play in us all achieving net zero. Everything from support from small grants to improving employee travel, free carbon surveys, mentioned those before, really important, valuable, skills training, decarbonisation of social housing, lottery funding. I'm not going to go through them all, as I say, but there's lots out there. A really good place to look if you want to sort of start exploring that is, and I put it at the bottom, Southwest Net Zero Hub. They're a fountain of knowledge, have lots of stuff online. I won't go into the case study I've got here of a business that we've worked with because I've gone over my time already. But there is lots of case studies of business that we've worked with to support their growth. And there's one called the Greener Greens, who are an example. There's a case study written up online about them. And that is it from me. I will hand back to Deborah.
Thank you very much, Ben. Time for some questions in a minute. So if you've got any questions for either Ben or Aisha, please put them in the Q&A. We've got a couple coming in already, but there's more people online, so you must all have some more questions. So let me take the first one. So in your experience, what are the drivers for companies to pursue sustainable finance? Who wants to take that? Ben, Aisha?
I'm happy to take it, I think. So pursuing sustainable finance, it's all part of growing a business which is sustainable in itself in the long run. So you want to grow a business that is going to be able to get not just funding now, but the next time you want funding to grow, finance to grow your business. Getting sustainable finance lined up, having those investors on board. I mean, we're seeing a trend of being refinanced by existing investors. is hugely outplaying getting new investment from an investor investing in a new business right now. They're reinvesting in their older businesses. On top of all the things I mentioned about why sustainable finance is important, I think it's really key to sort of understand, not just plan for now for this raise, but also plan for future raises. And by building all those things into your business that I mentioned on that slide of 3 strategic things you can do, you will find that your business becomes more attractive to retaining talent within it, more attractive to raising future investment, and winning customers. And I don't know if you've got anything to add to that, Aisha.
No, I think you covered it quite well. Yeah, I think we in the previous webinar that we did last week, we kind of highlighted some of the drivers for businesses kind of taking action more largely within this space. And I think you've kind of echoed it with kind of retaining that talent, being able to kind of get more work, and kind of essentially it's really increasing that resiliency of your business kind of going forward. So yeah, kind of echo everything you said.
And we'll be looking at bidding for future contracts and communicating with your customers and staff in the next 2 webinars. So that's a pre-runner. Do sign up for
Perfect timing.
Good answers to the questions, so let me highlight those. We've got one quick, easy question, which is, can we provide the link to the case study that was on screen in the chat? So I'm sure one of you can do that into the chat, which would be helpful. And whilst you do that, question, who provides green finance? Do we have any green finance names out there that we can throw in the mix?
Is this one for me?
Either of you, who are our sources of green finance then out there? So, I mean, Ben, go on then.
I was just finding that link actually, but I will put it in the chat now to that link. Done. I mean, there's a few big names that you probably already heard of. Banks like Triodos Bank. They would sort of classify themselves probably in that sector. There's a number of smaller regional investors and networks that are all applicable to this. However, I don't want to. I have to be careful not to sort of push one or two others over the other ones that exist. So what I would say is, give it a Google. I know that's a bit of a cop-out, but I started creating a slide with a number of providers on it, and I stopped myself because I was a bit worried that you missed the wrong person out. You look like you're highlighting one type of business or one lender over another. So I didn't do it.
We're going to struggle with the next question, which is one from Natalia, which is, could we have an example of a green bond that you could share, please? I'm assuming that fits into the same category. Google it.
A little bit, yeah. Again, we just have to be so careful with these things. I'm really sorry that I can't be, I can't sort of go into too many details on specifics in these. If someone is really interested, then they can reach out to me over email and we can discuss the specifics and I can maybe link you up. But I would worry about doing it live online.
Okay, so I think it's fair. We've got a few government agencies like Innovate UK and the government departments who have funding calls out there. If you're looking at grants, we can publish those. Ben's given a list and you can look online for those. Again, we can give a link for that. But when it comes to the commercial providers, there are a whole raft of them out there, and we shouldn't be sort of recommending any one. Just go and do your due diligence as to where you should be getting your finance from. Sounds like the answer, doesn't it, for those ones? Another question come in. Why should investors only fish in sustainability? Why should investors only look at sustainability things?
They don't. So investors will look at a lot of things when they're looking to do an investment. The investors are, you classify them however you want, but they are looking to make a return on their investment. So they will finance sustainability because of all those things I said about making themselves look good, to making themselves meet their own targets, to getting themselves refinanced. But it also spreads the risk because it is a growth area. They want to back winners. So if they're investing in they will be investing often in a range of businesses. If they're backing more winners than losers, that's good. If they're backing sustainably focused businesses, they're probably in a growth area and their investment is going to increase in value at a rate more than others. There may be more risk in there, but there's also potential for more reward. So think of a portfolio approach of investment.
So investors still have a portfolio, but in time, it's moving probably more green, more net zero, more sustainable, because that's where future markets are moving. But that portfolio is still there. Perfect. A question in from Robert. Does green finance play across into retrofitting existing housing?
Sorry, I should go on if you've got an answer.
Yeah, no, I mean, I would say absolutely right. I think finance is very much about driving that transition, and I think retrofitting is an integral piece of that. So, yeah, I would absolutely agree. I would absolutely, yeah, say yes to this, and that's probably part of what the government has announced is they've got their Great British Insulation Scheme, which they've announced, which is their updated version of eco funding, which is the energy company obligation. So that is, yeah, I think it's definitely kind of all looped in kind of together. So retrofitting is a very important piece of this transition, 1000%. And we need the money to be able to support industries and as well as householders to be able to do this as well. So.
Lovely. And I think the webinar series is Innovating to Net Zero. So we focused on some of the innovation funding, but there is, as Ben also had a slide, a lot of business funding out there to help individual businesses move towards net zero. And that includes things like the retrofitting that you've just mentioned. Ben, I've got a shortage of questions at the moment. So opening the Q&A again for the audience to put anything in. If you'd like to give us a quick couple of minutes on that case study for people, we do have time.
If that's what people want to hear me go on a bit more.
I've had a couple of requests for it in the chat. So.
Oh, okay. Right. I'm going to find my deck and reshare it then, because I might have just closed it down. Right.
While you're hunting for that, something I stumbled across the other day is to do with pension funds and how pension funds are now investing their money, and a lot of pension funds are now looking at how they potentially exclude future investment in high carbon industries, or even divest from those that they're already invested in. So that's, you know, in terms of where the market is moving, it's definitely a move towards sustainability, low carbon investment. And as pension funds start to move their money, and they are significant shareholders in significant businesses, we will start to see this agenda accelerate even more, I believe.
Yeah, absolutely. Direction of travel is as a lot of those trends showed, only getting bigger and faster towards this. And a lot of the work done on regulatory work within the City of London and wider government is, I would say, quite positive. And we'll hopefully be seeing the impacts of it soon.
We're all becoming greener. So there's a perfect, terrible segue into the Greens company for you, Ben.
Thank you for that segue. It's about as good as I could come up with probably as well. I love a terrible segue. So Greener Greens Company are a business that has been supported through Innovate UK Edge. And that's something which I work on. A lot of my time at Business West is working on the Innovate UK Edge project. And this is just a business that have come through our support. And what they do is they are an innovative farming innovation business. They are improving supply chains, removing unnecessary food miles, and producing fresher produce. They're a Bristol-based business, and basically it's about modular vertical farms providing readily available high-quality microgreens, herbs, and garnishes, which sounds quite niche. But if you look at the market sector they are working in, there is a lot of value there that they are trying to release. So we've basically supported them look at their funding and finance options as part of the work we've done. So, I mean, a little bit more about the business. They, enable the delivery of products sort of 30 times faster and fresher than competitors. And that's, that's kind of production of food on site or very close to site where they will be used. and people will pay for that. It tends to be, I think, the higher end users that go for this, but provisioning high-end microgreens incurs massive costs currently, quality and environmental penalties, says the founder, and the current supply chain is broken, so they're looking to fix it. So what we did to support them is look at their financial model, because they were focused on creating the business that works. Getting investment, it requires someone to really look at the financial forecast, the model that they're working on. And we supported them to examine their forecasts. We did a sense check on what they were looking to do, to put in there in the way that an investor would look at it. And by highlighting a number of issues, they managed to produce a much more robust growth plan, better understand what investments were needed to raise in order to build the farms, and establish the other things like the software and hardware, as well as hiring people. It's not straight. There's a lot of different ins and outs have gone there, and what it's done, it's sort of ironed out key flaws that some investors would have spotted. And as far as I'm aware, they've got good traction with investors off the back of that, as well as some work we did around pitching the business and how to make it attractive to SEIS investors. Other work has happened around grant funding. We looked on opportunities for them on the innovation side of things, and I believe they applied a lot of sense checking to their plans around raising further finance through grants. I think we might have, instead of encouraging them to apply for a grant, not encourage them to apply for a grant in a good way, because grants weren't right for them and they would have been wasting their time. And there was a much better way to get that finance to help them grow, to find the right investors. They needed, I believe, to focus on customers and traction as the next step, and getting the business in a place where it was able to raise a larger amount through equity to grow at the right speed to meet the demands of the market they had identified. And so, I mean, I think there's a lot of good testaments. I tried to put the link in the chat. I don't know if it actually went through so everyone could see it. I know I couldn't see a link to put it so that everyone could see it.
Ben, we'll add it into the message that goes out after the event for everybody. Fabulous.
I was struggling there to get it out. But it's there on the screen. You can read more about it. It's a business that is still early stage, but I think it's a really good example of a business that has targeted the right area and in doing so has been able to attract investors, specific investors to it, that are going to accelerate its growth in the right way and sustainably. So I don't really want to, I don't know if it's worth going into much more, but we can, if there's any questions off the back of that, we could answer.
Thank you for going through that, Ben. Everyone's gone quiet on us, so we've either answered all of their questions en route through, or they've all fallen asleep on us. So I'm hoping we've answered all the questions en route through, and we're done for the day. So I'm going to say a very big thank you for Ben and Aisha for your presentations and for the questions you have answered. If any of our audience do require more support around what you've heard, do drop Business West an email. Our email address is on screen currently. We shall be in touch. We'd be happy to help you with support. So please do that. As we've previously mentioned, this is part of a 4-part series. Today's is number 2. And you'll benefit from watching them all. The next 2 will cover more on communicating your message, culture and recruitment, and also winning and retaining business for growth. So the next one is Tuesday, 9 AM next week, 27th of June. So please do come along to that. If you want to book in, that's possible by using the QR code. So sign up for the next 2 using the QR code, or going to businesswest.co.uk/events, and you can also find the booking link there once the screen's disappeared. So thank you to both Ben and Aisha finally for joining us. Thank you to all of you, and we hope to see you next week for more Innovating to Net Zero. Have a very good morning.